All right, traders, a very good evening to you all. This is Avel from the Tradepsyche, and I welcome you all to the post-market analysis, outlook, and expectations from the market for tomorrow. All right. So in this video, we'll discuss that how the markets can look for the next week. What are some of the news, positive or negative, from global or domestic perspective, and what impact can it have? Can that particular news have on the markets? Whether we are gonna open a big gap down or big gap up, right? We'll discuss everything about the markets for the next week, right? So this video might be a little bit long, so stay hooked till the end. You'll definitely learn something. In the end, we'll also analyze the multi-sectoral. We'll also do the multi-sectoral analysis, and we'll also do the OI data analysis, that what is the change in OI and what is the total open interest, so that it gives you a complete insight at how the markets can be for the next week. All right, so let's start the discussion with the first thing, that are there any positive or negative global news flows from global perspective or from domestic perspective. So there is one very negative news from global perspective, and I think if you are an active trader in the Indian stock market, you must be knowing that. And it was, I think, around the Friday night when see, a trade war was already going between China and the USA, but that trade war just got intensified on Friday evening. So what happened is, USA had applied some fee on some vessels, basically some Chinese vessels coming into the USA had applied some fees, some tariff on that. So in response to that, what China did is, it blocked the export of rare earth metals, right? And these rare earth metals, right, they are very useful. They are very critical for USA in order to manufacture chips. uh, it is being used in the manufacture of also automobile parts. Like, it is a very critical need for the USA. So when China said, I think it was around 9 o'clock or 10 o'clock, so when China said that thing, that we are going to stop the export of I think China mentioned this around this one in the afternoon itself, the export. But in response to that, what Trump did is, Trump put additional 100% tariff on China. So whatever the Chinese imports are coming into the USA, it will have additional 100% imports. So now, post this one, right? Post this news, Trump posted this on Truth Social, and it got viral. And the moment he posted, each and every market crashed. Crypto, US equities, Indian gift Nifty, all the three which we which directly affects us, all the three markets crashed. USA markets crashed by more than 2 percentage. Whether it's Nasdaq crashed by 4 percentage. Can you imagine the USA's IT index? It crashed by 4 percentage, and its effect, as you can see on the screen, gift Nifty is almost 200 points down. Right. So this happened on Friday night, and post that, the, the post which Trump made, it had already created a huge impact on the markets. The markets crashed. It was a flash crash. Even in Bitcoin, right, it was a flash crash, and gift Nifty suddenly went down 110 points. And I think post that, I think the fall just continued, and we might see a big gap down on Monday morning in Indian stock markets. So I'm making you guys very much aware, and very much I'm informing you very well ahead, that yes, we might see a gap down. But let's discuss that after the gap down, how to trade the markets, how to deal with that gap down. Because our positioning in the markets is long, because we already got trapped in the shorts once. Markets broke the prior day low, it closed, we shorted the market, and again markets went above prior day high and closed above prior day high. But now markets again are opening a very big gap down on Monday as of now, right? So we'll discuss that how to. So this is the only negative thing, but some relaxations came in yesterday on Saturday, when China said that the export ban is not a complete ban. It's it will be on a regulatory basis. So some relaxations have come in, and Trump and Xi Jinping, the Chinese president, they are still meeting. Their meeting is not cancelled. So we can still expect that Trump might chicken out, or Trump might reverse the 100% tariff, which can be, good for the markets. So on a and on a like, to sum up, right, what Trump has done, like by applying 100% tariff, it will be definitely treated negative. It has been treated, right? Gift Nifty is 200 points down. It is already it, uh, it is already being treated as a negative thing for the markets, and we have seen the effect, right? But on the positive side, Chinese commercial ministry, they came out and they said that it's not a complete ban. You can negotiate and all. Some relaxations have come in. So this is one negative news from the global perspective. I don't see any positive news. The only positive news from global perspective is, I think, Modi has been invited to some US event, and which people are seeing that it is some sort of positive, because India's and USA's relationship is healing. But I don't see that where there are so many big negative factors, the small positive factor can do something positive for the markets. Right. So these are the two news flows which are going in the market as of now, which can really impact the Indian markets. There are multiple news, but they are not impacting the market directly or indirectly. Right. So now let's start the discussion. Let's straight go to the charts. We'll once discuss that what happened on Friday, and where did we exactly got trapped, and how did we deal with this, and what can we expect in the next week and for the Monday. Right. So see, as per our last discussion, what we had is we shorted the markets roughly around here. Like when this actually upgoing trend line broke down, right? If you guys see this, when this upgoing trend line broke down here, we shorted the markets actually here. But we exited the market somewhere around here, giving a, I think, 50-60 point stop loss both in mid cap Nifty and in Nifty. So the point why we shorted the markets is, see, you have to follow the system. Why we shorted the markets? Because we saw two back-to-back week daily candlestick. This is a weak candlestick, and this is also a weak candlestick. Additionally, a close below prior daily low, a good close below prior daily low. But what happened just after that? The more than 50 percentage, just the moment we crossed more than 50 percentage of prior weak candlestick, I think this was the level, we saw a continuation green candlestick on Friday. So that's why I always tell you guys that, see, if you want to see the markets from this perspective, see, understand this perspective, that whenever you take a trade, whether it's a bullish trade, whether it's a bearish trade, everything is a game of probability. You take a trade at this point of time, you think that, let's suppose markets are in a very good trend down like this. So you think that yes, the markets are in a trend down, and you are waiting for this point, waiting for this trend line, and you sold here. But the markets, they were not in a mood to go down, and they formed a W. So these are two probabilities, that if the market goes up, that yes, the markets can again come down. So this is probability 1. We can mark this as P1. And if the markets actually turn bullish, this is probability 2, that it might, form a this pattern. So these are two probabilities, and yes, we shorted here. It was a weak candlestick, but yes, the probability was against, because, and why we had the conviction, right? So last time, if you see, the moment this strong trend line broke down, it was such a beautiful down movement, and we captured this in form of mid cap Nifty shorts, and it was huge profit in mid cap Nifty shorts, right? So the anticipation was here same. This trend line was going up, and the moment this trend line got broken down, we shorted the market, but we got stopped out. Simple as that. It's a very natural thing. Nothing to, nothing very big. It happens every time in the game of trading. Be taking an SL is a very normal process and a very frequent process. Just your duty is to keep those SL small. So we did not sit in shorts, we had to exit, because the markets was again going to breach the prior swing high. Now post that, what we did is we went long. Just the moment markets broke out, we went long here. But the moment we went long, I think the markets did not move much, and we closed. I mean, the markets in, like, the our longs are flat basically. We are long currently in the market, right? As per our theta edge group. right? So the closing on Friday, if you see the daily closing on Friday, right, it is a very very bullish closing, and from that perspective only we took the longs, we carried the longs, but nobody knew that Trump will come and apply the tariffs, right? So now, since we are long, how to handle this thing, and what is our strategy, what will be our strategy, that below this level we will exit our longs, and until unless that level is not breached or not sustained on the downside, we will continue to hold the longs, right? So on Friday, the second half was muted, and we saw a very very good, and this is kind of a this pattern I'll make you guys see if you want to see this pattern. But generally, right, this is a kind of a pole and flag pattern. The moment this pole and flag pattern broke out, I think we saw good momentum. And the momentum basically, what the theory of pole and flag says, if a pole and flag is breaking out, technically its length should be, if its target should be equal to the length of pole. All right. But now in our case, since we are opening a gap down, so we have to see that what will be the method or what will be the strategy to deal with this thing, right? So let's start the discussion. This everything this has happened, and I have explained the logic that why we went short, right? The why we went short is it was a technical breakdown of this trend line, but since it's a game of probabilities, there was a possibility that yes, we might go up again, right? So let's straight go to the weekly time frame and see that how the weekly close is. And since we are opening a gap down, then what can be our action plan? All right. So from weekly perspective, the close on Friday 3:30 p.m. is very very ultra bullish. I'm not gonna say that yes, the moment markets are opening on Monday, buy the dip, buy the dip. No, we will discuss that on the lower time frames, on hourly and 15 minutes time frame, that what to do when the markets are opening at certain level. But if a trader is there and he's following the system very disciplined, he cannot, and he's a swing or positional player, he cannot take care of these overnight movements, right? Your stance, your positions will be based upon what you currently see in the market. What you currently see in the market is an ultra bullish closing, because we have closed almost last weekly high was what, 24,767. This weekly high is 25,200, almost 500 points up. So I, and the second, this is first, this is the first point, this is the first bullish point. Second bullish point, after these three candlesticks, green candlestick, all the three candlesticks, they were retraced in a one big green, one big red candlestick, and even I assumed that yes, the top is there in the market, and I expected for a continuation, but the continuation did not happen. So even after this big red candle, if the markets, they have the capacity in this range to reverse down, what I feel is even if we open a 150 200 point gap down tomorrow, I think that gap down will be bought off in 2 to 3 days. I think so, and I think from the second half of the week we might see the bull rally, right? But this is just a anticipation. This is just a calculation. This is just a probability, as I say. So we have to calculate the most probabilistic event, most probabilistic thing which is going to happen in the market, and we have to trade on the basis of that with proper risk management and discipline, right? So I'll be marking the levels, marking the important levels for next week. The most important level is now 25,330. Will This is a more precise level, right? 25,333. So 25,330 is a level. See, we are opening a gap down, and I'll also tell you that even if we are opening a gap down, what is the level below which you have to go ultra bearish, and you have to book your longs, and you have to go ultra bearish. So as I always say, I have a theory that if the 50% of any prior big candlestick is being retraced and sustained, then there is a probability that yes, we might retrace the full percentage of the candlestick. So this is a big weekly green candlestick. Where is it? 50 percentage, 25 100. That's it. That's the only level now you have to remember. If at all on Monday morning an early close comes below 25 100, see currently we are at 25 to 80, we are anticipating a 200 points gap down, so we'll be roughly opening around 25 100. So if in the morning first hour we are seeing a close below 25 100, 25 50, then I think this whole green candlestick can reverse on the downside till the point 25,000, which is 24,888, which is the prior weekly low. So these three levels, 25 330, 25 100 and 24 888, these three are very very crucial levels. And what I anticipate from the next week is, because the markets have to factor in an event, a news. If that news wouldn't have come, I would have given you anticipation that yes, we might form a big green candlestick like this, because this big red candlestick is reversed within two candlestick, and it's a technically a bullish sign. And this has happened in the past many a times. See, even if you see, right, the if you see, just look at this point in history. From the price action perspective, this is a weekly big breakdown. But within 2 weeks, it's the same pattern. Within 2 weeks, the markets recovered, and I think this is the tick which markets made down, and then post that we saw a very bullish rally. And this post down, this down tick, right, this down movement was till 50 percentage of the prior weekly candlestick. So same can happen next week also. So seeing the current price action, the overall scenario, the overall stance is not bearish, it is bullish only. But we'll have to figure out, we'll have to see that how the markets are treating the China news, the US China trade war, how the markets are treating that. If the gap down is retraced within 1 or 2 days, then I think we are poised for 26,000, 26,500. But if we are breaching the prior weekly low, which is 24,888, or if we are breaching even 25,000 and sustaining a daily candlestick below it, then we are in a bad shape. So that's what I'm saying, that we'll see on the lower time frames how these three levels will gonna be. But above 25 330, the first level which will be reaching is 25 500 and 25 670. Above 25 670, it will be a huge short covering till 26,000. This we have discussed many times, there's no need to discuss this again and again, right? Below 24 800, the first level which will be reaching is 24 630 and 24 600. But the moment, if, because this is a very big this is a low of this big red candlestick, and also a bottom formed around this level. So if this breaks down, I think 24 500 will not be saved. 24 to 77 will be a last level which the bulls can save, and below that I think the markets might crash another 10%, because then this M pattern will come into effect. Alright guys, so it is very crucial and important for the markets to save the level of 25,000 for in the next week. Let's go to daily time frame and we'll discuss. Daily time frame, the closing is still very bullish, but as I say that yes, we have to factor, the markets have to factor the Friday night news. So prior daily high same 25 330, prior daily low is 25 150. Right, if at all we close an early candlestick below 25 150, then we are poised for 25 100. The moment we go below 25 100, I think 25,000 is imminent, so I'll mark 25,000 also as a level. Right, so from daily perspective, if you see the markets on a holistic level, on a 360-degree view, so the markets are stuck in a, what do you want to say, from 25 320, from 25 300 to 25 24 300 to 25 300, 1,000 point range. Market is stuck in 1,000 point range from the month of May, almost past 5 months. If at all you want to see the monthly candlesticks, past five, 1 2 3 4 5 6, this is the sixth candlestick that we are trapped in this range, and you want to extend this range little bit, you can extend. So it is the level of 25,300 and 25,700. So 1,300, 1,400 points range we are stuck in Nifty, and the moment we break this range, either we are gonna clock 1,300 point on the upside, or we are gonna clock 1,300 points on the downside. That's it. All right. So let's go to again daily time frame, and in daily time frame now we'll do one more analysis. I think this is the whole week, right? So we'll take what we'll do is we'll take the 50 percentage of this. So it is roughly coming, the 50 percentage of this rally is roughly coming around 25, 24,960. So if this whole rally, if the 50 percentage of this whole rally is being retraced, see, we are opening a gap down around, let's suppose, 25,000. So it's a good place for the markets to retest and start going up like this. All right. And what I'll say is, what one more theory I have, right? I'll delete all these levels. See, currently what we did is we broke down 25,000 and we sustained, we made a base around 24,600. Since we went up, we came down, and we took exactly a support from 25,000. So 25,000 should be a very good support again. So the markets are doing something like this. So if the markets are coming here, it will again take a support, and if 25,000 has to break down, it will break down in this kind of this pattern. All right. So saving 25,000 also is very very important, more than 25,150. So from my perspective, I'm not that much bearish on the markets. If the markets are opening gap down, we have to wait and watch that. If yes, the gap down is sustaining and we are breaking the morning's low, then yes, we have to unwind the longs, and we have to see that if the markets are breaking 25,000, then again we have to short the markets. Or else, if your risk appetite is not much, wait for the markets to clear this range. Either 25,500, go long above 25,500 and go, or go short above below 24,700, 24,300, if you don't have much risk appetite. So if you have incurred a big loss already, so wait for this range to get cleared out. You have to keep a patient unless and until this range is getting cleared out. Only go bullish above this range and only go bearish below this range. All right, traders. So from daily perspective, we have discussed. Let's go to hourly time frame and discuss that on the. Let's basically go to 15 minutes time frame and we'll discuss that. What are some of the support zones and resistance zone, and in case of a big gap down, what we can do. See, currently we are seeing a 200 point gap down. So we are at 278. So if you calculate 200 points from there, so roughly the gap down can be around 25,100 to 50. In this range, the markets can gap down. So the next support for the markets is exactly at 25,000. So let's suppose if the markets are opening at this range, so markets might go a little bit further, but it has to be watched very very keenly that the range, that the level of 25,000 is acting as a strong support or acting as a weak support and it's breaking down. So let's suppose, even if, so I'll make you see the OI data and I'll correlate with it. We have very good number of longs on the downside because the Friday's price action was very bullish. People have carried longs. The smart money is long, the FI is long. So in my perspective, even if we are opening a gap down, the markets first will retrace this gap on the upside, and then markets will find a either a resistance zone and markets again are gonna come down. If the market, see, post the gap down, we might, there is a possibility, and it happens almost every time, that we might go a little bit more down, but a low will be formed around 10:30, 10 o'clock. That low, from that point the markets will start going a little bit up, and around 12:30, 1 p.m. the markets will again go trending. If that morning low, in that, after that retracement, if that morning low is being broken, then short at the break of this morning open and keep trailing your stop loss like this. That's it. Sorry. All right. And if at all we are opening a very big gap down and that full gap down is being recovered and the markets are sustaining at prior daily close, then I think we are poised for bullishness. It will very very matter, it will matter a lot that how we are covering the gap down. If at all the cover of the gap down, if while covering the gap down it is a slow and sluggish momentum, it means that buyers are not interested. If it's a vicious and it's a very strong recover of the gap down, of the gap created by the gap down, then I think the bulls are very much activated in the zone of 25,000, 25,100, and they are poised to take the markets about 25,330. So price action in the first one and a half 2 hours is very much crucial for Monday, very much crucial. All right, if at all, in any case, because there is positive news also after the negative news came, if at all we are opening flat, we do not have to trade this range. Intraday shorts, when will intraday shorts will come, which can be 5% of your portfolio. Intraday shorts will only come below 25,100. If at all we are breaking the level of 25,100, you can give the stop loss as this 25 200 270 100 point stop loss and keep trailing that stop loss like this. All right, but a good support is also seen at this point of time, 25 200. Right. So from my perspective, we have a trend line now. We have another trend line being built, this trend line. So technically, if the markets are even opening gap down, we should not close anything below this candlestick, below this trend line, because the moment we'll break this trend line and we'll start moving down like this. All right, I hope it is clear. In any case, I am not anticipating, I don't think that markets will gap up, but in a 1% chance, if the markets are opening a good gap up, let's suppose around 400 500, the markets will be strictly in buy on dips. All right, so this was the discussion for Nifty. I hope the discussion is clear to you. To sum up, I'm not bearish as of now in Nifty, not at all, because from my perspective, I trade on what I see in the intraday markets, what has actually happened when the markets are actually on. It does not, yes, it affects me, but I do not give much attention to what gift Nifty is doing. When the gift Nifty ends and the real market opens, at that point of time we have to assess that what is the market actually doing, and we have this strong upgoing trend line. The moment we break below this one, I think then there's gonna be, but I think let's not take the support trend line, let's only take the support of levels. The only level, ultimate level market has to protect the next week is 25,000. That's it. All right, let's go to Nifty Bank. And what Nifty Bank has done is, on Friday what Nifty Bank did is slightly profit booking. Yes, we broke 56,500 on the upside and we were bullish, but at the end some selling came. So for Bank Nifty, what do you have to keep in mind? Bank Nifty's price action is ultra bullish. It is even, like, it is more bullish than Nifty. So for Bank Nifty, I don't see any bearishness after now. Even if we are opening a gap down, I think from my perspective, the Bank Nifty will recover that gap down. So for Bank Nifty, you can keep an approach on for buy on dips. We have broken out of the prior weekly high, which is 56,600. Above this, I see Bank Nifty at 57,500, and the moment Bank Nifty is 57,500, the moment Bank Nifty is at 57,500, we can roughly target at 60,000 basically in Bank Nifty. But what do we have to keep in mind? That 55,740, which is prior week low, should be protected. If 55,740 is being broken down on the downside, 55,000, 54,000, and 53,000. Simple. Let's go to daily time frame. Daily time frame is ultra bullish, but we have to see that how the markets are doing on Monday morning in the first 1.5 2 hour session. All right. If on, let's, I think in daily time frame, what I'm seeing is the Bank Nifty has the clear cut potential to reach 57,500. So after opening a gap down, I am thinking to go long in Bank Nifty. If the markets are opening gap down, let's suppose Bank Nifty has to just protect 56,000. If you see Bank Nifty at 56,000, I will be interested in buy and dip opportunities. I will buy at 56,000, give a 200 300 point stop loss, and keep trailing till 57 60,000. That's it. That's the only strategy in Bank Nifty, because I am not seeing any bearishness as of now. But if at all we close a bearish candlestick on Monday, then we have to change our strategy. All right, let's go to 15 minutes time frame. in Bank Nifty. If at all we are opening a very big gap down, a good support level will definitely become at 56,000. If Bank Nifty is able to protect 56,000, then I think the dip which we will see on Monday morning will be bought like this. Alright, or you can mark this trend line, but I think that markets will definitely open below this trend line. So for Nifty 2550, 25100, the range of 25,000 to 25,100 is very much crucial. That's it. So for Bank Nifty overall, I'm not at all bearish. Even if we are opening a 500 600 point gap down, Bank Nifty has a clear cut potential to recover that gap down. Let's quickly go to the OI data of Nifty and Bank Nifty and try to correlate it with what we are seeing on the charts. Alright, we'll discuss the multi-sectoral analysis just after the discussion of OI data. Alright, so the change in Nifty for the change in Y data for Nifty is ultra bullish. There is unwinding of 50 lakh shorts and addition of 4.3 CR of longs with the highest support at 25,300. So let me do one thing. Let me just alright open the option chain and we'll see that exactly how much premium do we have at 25,300 put. So at 25,300 put we have almost 50 points of premium. So the moment markets will open gap down around 150 points, its delta will be zero point 0.6. So it will cross the level of 100 So these option writers in the put might panic, right? But since it is the big money, 5 CR of longs have been added with biggest support at 25,300. I think even if we are opening gap down, this big money will be protected. So there is a probability, since there is so much demand on the downside, I think the gap down will be definitely filled. It is my high conviction that yes, any gap down which will happen tomorrow, it will be first filled fully. Then the markets will take a decision that whether these put writers are exiting or whether these put writers are staying in the market. If we would have, if the data would have been negative and then we have opened a gap down, then the situation would have been different. But I am seeing a good supply, a good demand zone around 25 200 300 as per OI data. All right, the biggest unwinding which happened was at the level of 25 200. Total open interest, if it all we talk about, the biggest, and what people have done is unwinded some longs from 25,000 and they have shifted to 25 100 and 25 200. So this is actually showing very aggressive bullishness and overconfident bulls. So this is a very tricky thing, and how I deal with this is, and I have seen this I've seen this thing in the markets very frequently, that the moment any one side of the participants, any the moment participants go very overconfident and very aggressive on one side, the market once always goes against them, flushes them, takes the liquidity and then go against it. And this is exactly what can happen on Monday morning. We might open 150 to 100 points gap down. These aggressive put writers, bulls, will be flushed out, and these aggressive call writers will take a profit. So Monday morning, I think first 1 hour or 2 hours will be very volatile because these aggressive bears will take their profit booking. Definitely, they will not leave, and then these aggressive bulls, either they'll book, which can create fall, or if they hold, then the profit booking of these bears can bring you a rise in the markets. So the situation is very difficult. We have to still follow the levels. The only positive thing about the markets is we have very beautiful supports at 25 200 100 and 25,000. So even if we are opening a gap down 100 150 points, I think that the markets will recover the same day itself, right? Let's go to bank nifty, and the OI change in bank nifty is same, 12 lakh 12.5 lakh addition of longs, and almost 4 lakh unwinding of shorts, so with biggest support at 56 500, right? So even if we are opening a gap down on bank nifty, I think let's maintain a stance of buy on dips. You will get a good dip to buy. The moment you see a, let's once go to 15 minutes time frame. Let's suppose we are opening a gap down at around 56 200. We have a very good support at this point of time because this is a very good green candlestick. Let's suppose the markets are opening a gap down at this place. If at all in early time frame you are seeing that an early candle is closing above the high of early candlestick, this will be the first intraday sign that the markets are reversing. The moment markets bank nifty shows a reversal, I'll be more interested in trading bank nifty tomorrow. All right. So let's see that how the market goes tomorrow. The OI data says that the markets are very bullish, and even if we are opening a gap down, that gap down will be covered the same day and within the first half of the market. The total open interest, if you want to see, it's a 57,000 saw a good small amount of addition in the bears, but 57,000 put also got shorted, which means the bulls got added in huge quantities at 57,000 on Friday, and the bears got unwinded. They got flushed out from 56 500 and way below levels. So total number of, still in bank nifty there are huge number of shorts. The PCR is 0.93, so bank nifty has a good potential to go on the upside. So overall, from my perspective, traders, what the OI data says is we have a huge demand in for Nifty in the area of 25 100 to 200. So if the markets are opening a gap down, either this bulls, right, who have shorted the put, either they will exit and it will create a more fall. But there are great amount of shorts also in the system. So it will be totally upon that how the intraday markets are behaving in the first 1.5 2 hours. Don't at all punch any trade in the first 1.5 hour. You will be trapped in the volatility because this is the big money. We don't know that what OI change in OI data what will happen in the first 1.5 hour. Whether the shorts in the system are being booked, whether the longs in the system are being booked, whether they are both being booked and the new orders are coming in. What is the new order? But as of now, what I think from my perspective is, but as of now, what I think from my perspective is that the markets once will open gap down, it will sharply recover, and then it will go near till previous day close, and then at that point of time, markets will take a decision that yes, whether to cross on the bullish side or whether to again fall on the downside. But the gap covering fill will definitely happen. All right. So this was it. This was the complete analysis for the Monday morning. I hope I have made myself clear to you guys, and you guys now have clarity that how to deal with Monday. The overall stance is, uh, which it will totally depend on how we do on Monday. Basically, what is the closing, where the markets on Monday are closing, the further stance we can anticipate like that. Because at this current point of time, even if we anticipate that the stance is buy and dips, we don't know that the gap down which will happen on Monday morning, it will, that gap down will be sustained or that gap will be covered. It is a totally subjective situation that if the gap is covered and we are sustaining near prior day close, then yes, we are poised for more bullishness in the markets. But if at all we don't cover that gap and we break the Monday morning markets lows, then I think we are poised for the break of 25,000 and then further downside will follow. That's it. So I'm not giving any bias as of now. The bias from the price action and from the OI data is ultra bullish. But as I always say, the price action is a slave of sentiment. The sentiment is the slave of history. History, sentiment, charts, and then charts. After charts, the OI data comes, the data comes. So the data is a slave of charts, charts is a slave of sentiment, sentiment is a slave of history. That's how I see the market. That's the bottom down approach I follow in the markets. So the most priority is I give to is sentiment. If the sentiment changes tomorrow morning suddenly, because sentiment on Friday, Thursday was ultra bullish, but if the sentiment gets changed tomorrow morning, we'll get to know tomorrow only itself. If the sentiment gets changed from bullish to bearish, then the gap will not be covered, and even if the gap is being covered, it will very sharply retrace back on the downside. And the moment we'll break 25,000, I think it will be a good fall from this point. Acha, one more thing. The traders who are feeling the heat of the loss, right? Just do one thing. Just take this range in the markets and don't trade in this range. 25,300, 25,400, or you want to be more secure, 25,670 or 25,700 and 24,400. 1,300, 1,400 points move, don't trade in the market, because the moment markets will break out or break down of this range, you will get a beautiful momentum. So either you can wait, if you don't have any much risk appetite, don't unnecessarily trade the markets. Either be in a long term straddle and strangle which can fetch you 5%, 6% a month, or don't trade the markets. That's it. Wait for the markets. Alright. So that's it. That's my stance for Monday. That's the whole discussion for what the markets can do next week and what might happen next week. Alright. If you have watched this till point of time and you have liked the video, leave a like, leave a comment if you have any doubt. If you have not subscribed to the channel, subscribe to the channel. Thanks. Stay safe in the market. Good evening.